Ooh, what's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we have a very special guest, Sara Strat Sniper. Very grateful to have her in today as a wealth of knowledge. And she's going to be breaking down a lot of those details that you guys have been looking for, and just a wonderful person altogether. So, Sara, say hi to everybody.
Hello, everybody. I'm so excited to be here. Like I said, me and Rich from Trading Wars, we are new friends, and I just kind of caught one of his charts and I was like, oh my God, he does what I do. I have to be his friend and his follower. So I'm super excited to be on here today.
Beautiful. All right. So what I'm going to do here is I'm going to go ahead and retweet okay, I checked the audio. We're good to go. So I'm going to go ahead and retweet our chat here, and then we can do some enticements. I love to call it. Normally, I give away free donuts at the end of the stream. But those donuts will be virtual, unfortunately. So here we go. So let's get everybody in here. So live now, I feel like we should do some giveaways. I'm going to do some giveaways. So live now, come for giveaways. So either going to do some membership giveaways today or some of my books or something so that we can get you guys here. Promise you guys, you're going to love this stream. So here we go. Boom. All right. And I see we have 70 people in here so far. And obviously that's going to keep growing. So before we get into the questions and the interview, guys, why don't you go ahead and, as always, hit us up. Let us know where you're tuning in from tonight. I'm going to throw some of your names up on the screen, and then we're going to get the party started. Okay, so here we go. We got Andrea from Houston. What else do we have? G Trades from Boston. I see someone's here for the giveaways. That's good, brother. Chelsea from Iowa. Quasny from California. Elio from Maryland. Randy from Atlanta. Clark from West Palm Beach. Welcome back, brother. I saw you here last night.
Ooh, I saw Kansas City.
Oh, you saw Kansas City? Kansas City. Let me see if I can find that one. Right here. Boom. Jeremy.
Chiefs. Yep, there you go. They just won.
Becky from Orlando. Koserva Domex from Dallas. And let's do one more. One more, guys. One more. Do we have anything special in here? Let's see.
Any St. Louis people?
Any St. Louis people, guys? Brian Park from New Jersey. Thank you. I'm looking. Chiefs. I see Chiefs. Go Chiefs. Chiefs. Boom. All right. Okay, there we go, guys. All right, we're live. 150 people. Thank you. Thank you for being here. I promise you guys we're going to add value as we always do. All right, so the first thing that I wanted to get started off with is I wanted to go to Sara's Twitter here, and I wanted to show you guys something that really caught my attention. I think is a lot of value. So right here in her pinned tweet, she has this amazing Google Docs package here, guys. I have it right here, and look at all of this value right here, guys. We have cheat sheets, we have some YouTube videos, we have some great channels to follow. So please go ahead, go through this material. Something that I pulled up right here, guys, is this strat combos sheet. So we'll be talking about this one. I think this is amazing. And I have the YouTube video playlist. So make sure you guys check that all out. I mean, guys, it doesn't get any better than this. You have someone that's literally holding your hand. And we got to show appreciation and love when we can. All right. So let me get into here. So Sara, let's start off with, just your background in trading. So I know you said today was your 3-year anniversary. So how did this all get started?
Well, I just want to say, I love your vibe. You're such a hype boy, and it's such a fun time already.
And I didn't even have a drink yet.
No?
No, this is natural energy.
I love it. I'm on glass 2 of my wine. Okay, so how did I get started trading? I got started trading in 2017 when the crypto bubble was starting. My brother introduced it to me, told me I needed to get in it, and I fell in love, not with the money. I was intrigued. I was so intrigued. I was like, how could I possibly make $1,000 while I'm asleep? This is insane. And so that just like scratched that spot in my brain. And I'm like, what is this world? And I can do it all by myself. Mm-hmm. So I just went to the internet because we are so blessed to have the internet these days. My child does not understand that. But So I went to the internet and I just started looking for any and everything that I could find. And I found the chart guys. I started with the chart guys in 2017. And I had a full-time job. I was a manager. I'd been at this company for 11 years, worked my way from a cashier all the way to a manager of the top store out of 80 stores. So just busted my ass.
Mm-hmm.
And then I was like, I don't like what I'm doing. I don't like it. I mean, the money's good, but I'm over managing people who don't want to be managed, don't want to be motivated. I just want to do me, worry about myself. And I just spent every waking moment learning technical analysis, even while I was at work. Like, wow. I would have earbuds in and I would just be listening to Dan from the chart guys all day long. I was obsessed. So I started with crypto, which was a fun time. And then when it hit the top, I couldn't short it without being illegal and like getting a VPN and all that. So that's kind of how I made my way into stocks, and then just kind of went from there.
So where did the strat come into play?
Okay. So the strat came into play because I had been trading for like close to a year, and I still there was something I was missing, and I wasn't even sure what it was. And I was just searching the internet for more, like we do, got to find the answers. And I came across the strat, and it just really piqued my interest. Mm-hmm. And what I realized, the piece that I was missing was where to take profit. Mm-hmm. And so the strat is what gave me, it's like pretty cut and dry. Like, if this, then that. So if this happens, you enter, and then you have a defined area of where you're going to take your profit. And that was perfect for me because I'm more of a day trader. I'm not really a swing trader. I'm trying to strengthen that muscle. But I love that. And I don't care if I miss a little bit more. I got into the trade. I got out where I was supposed to. Boom, done, success, move on. So that was what I was missing.
Beautiful. So let's pause right there, because this is an important topic that we talk about all the time on my channel, is about removing the subjectivity in trading, removing the human judgment part. And that's something that, the strat, I've looked at it, guys, here, looking at the listing and their patterns. It either is or isn't. That's one of the things that's very important with any variation of inside bars, outside bars, or just candlesticks in general, guys. They're very, very simple, powerful tools, because something like this, Microsoft here, we have this double inside bar pattern on my chart. This was one on the weekly chart that we were looking at last week. And, for this condition to happen, it has to, there's no judgment involved. If you look at this chart, everyone can tell you this is a double inside bar pattern. And having that type of ability to remove the human aspect of it really helps to make trading simple. Because as an example, guys, if someone might look at this and say, it's a flag, right? It's a bull flag, or it's a whatever. So, but how are you actually going to define that? Is it because there are lower highs, higher lows? Some people are going to do it different than others. And for new traders, guys, that is very, very difficult for someone to pick up, especially when you're looking to emulate other traders that might have specific ways that they trade. So this, my friends, is, in my personal opinion, the best way to get started with a non-subjective way in trading. So anyways, back to our topics here. So I know you were talking about you're more of a day trader than a swing trader. So talk us through that. So as a day trader, I guess I'm a little bit opposite. I'm more of a swing trader than a day trader because I use a lot of automated orders. But when you're day trading, are you using option contracts and shares? And I guess which one do you prefer?
So I have started using more options. Mm-hmm. And the reason for that is, one, my risk is defined right off the top. So I don't even so much have to worry about a stop loss. I mean, I do. If it goes against me, I will cut it. But the most I will ever lose is whatever I put into it. So that, for me, as far as like a risk management tool, is a big deal. And I did a chat with another trader earlier, and I was telling her that the only reason I'm even here now is because of my risk management. And like, I treaded water for like 2 years before I could figure it out, really.
Yeah.
So options is a great way to like keep the fear down and just, I don't know. So I've tended to like shift more to options these days. And also, obviously, the percent gains are so much bigger and faster. And I guess that fits more of my attitude. I like things to happen faster. So
yeah, and
that's why I'm not a good swing trader. I'm too impatient.
and that's very important because especially with options, it's kind of hard in terms of they move so quickly. So if you were to kind of have, let's say, like a 10% stop loss or 5% stop loss, generally you might get triggered in a little prematurely. And for those that follow me, I also do a very similar approach. I guess I risk 100% of the option premium on a trade, just because. I'll just give a few examples. Like last week, I was swing trading McDonald's call options, and they were pretty much down 60 or 70%, and then by Friday they came back in the money, and I was making money. So that I prefer to kind of put the full risk in there, and I keep that risk at maximum of 2% of my capital. So if I have 100K, I'm only going to put between $1,000 to $2,000 in each option play. And if they go to zero, I'm okay with that because I'm not going to be, denting my account to the point where I can't keep trading. So do you use, I guess, a position sizing type of strategy also with your options?
Yes. Well, mine is not percentage based. It's more dollar based.
Got it.
So yeah, and you hit it on the head there, though. You have to position size accordingly. You can't just, go in 50% of your account and be like, yeah, I'm willing to risk all of this. Like
exactly.
And that's where a lot of newer traders blow up, and why risk management is so important.
Exactly. And then, that's something that I preach a lot in the stream. And guys, so with a 2-to-1 risk to reward, guys, in the chat right now, 2-to-1 risk to reward, we go through this every week. Let's show Sarah how smart we are. With a 2-to-1 risk to reward, how many trades out of 100 do we need to win? Comment in the chat right now. All right. So let's say we're taking option plays. Let's say here, we're taking this Microsoft double inside bar. We get the trigger down here. We're going to go short. We're going to buy puts. Let's say we put in $200. We put in $100 worth of risk. And on average, we're making about $200 in profit. So here we go. So 34, 34, 34, 34. There we go, guys. All right. Let me throw you guys up in here. Thank you so much for that. So there we go, guys. Yeah, that's exactly what Sarah's talking about there, is with the risk to reward and the position sizing. If we're going for 2-to-1, we don't have to be a genius in this game. We just need to win 34% of the time. And I know if we follow an approach that we can consistently execute and we follow the rules, we should be able to hit that mark. All right. So thanks. So perfect. All right. Yeah. So back to what you're saying.
Wow. Congrats to your viewers.
Well,
we drill
this in every week. We drill this in every week. So they've been prepared. But
very nice.
We always try to look at things like out of 100 trades. Out of 100 trades, if you're trading a double inside bar pattern, for example, you can't judge it after 5 trades. And let's say you had losers and then you say, hey, this pattern sucks. You have to go over at least 100 trades, really see what the win rate is, drill into it and understand where the win streaks, where the lose streaks, how do I put my stop losses, etc. But yeah, so risk management, position sizing, that's pretty much trading. Everything else is, is kind of a coin flip in a sense. So let's continue here. So I want to ask you a lot about that time frame continuity. It's something that I've seen you talk about a lot. For me personally, with the inside bar plays and the breakouts, etc., I love using Fibonacci based targets, or I like using Fibonacci as my bias. But how do you use the time frame continuity, especially when you're day trading? How do you get that down into a lower time frame?
Okay, so here's the thing with the strat and with time frame continuity, we tell the newer traders to stick to full time frame continuity, which means you have at least 4 of the big time frames are the same color, meaning you've got, let's just say, the monthly, the weekly, the daily, and the hourly. And that just keeps them on the path of the trend is your friend. So if all of those time frames are green, that means that it's obviously in an uptrend. People are buying, and they're buying on every time frame. And you do have people who only trade certain time frames. So like the investors, they might use the monthly. You have the weekly traders. You have the daily time frame traders. Mm-hmm. So we encourage the newer people to stick to that. Now, we do use broadening formations and stuff like that, which is kind of a counter trend time frame continuity, which I do not recommend that newer traders start off with. It was one of the things that took me the longest to understand. But I was looking at something else about time frame continuity when I was looking at your Twitter page today. Mm-hmm. You have a drill down method.
Yes.
Which is what we use multiple time frame analysis. And what that means is we will use the smaller time frames to trigger the larger time frames.
Exactly.
So often I will, and I post a lot of weekly chart setups because I love the weekly time frame. They play out like 90% perfectly of what I think is going to happen, what I see on the chart. Mm-hmm. And what I expect to happen, it pretty much always plays out. So what we'll do is we'll go down to the daily and we'll use one of our actionable signals from that strat combo sheet and says, so the daily time frame, if this happens, that will trigger the weekly time frame. So your drill down method is so much similar to what we do in using the smaller time frame participants to trigger the bigger time frame participants.
Got it. Yeah, that's a great explanation. And time frame continuity, definitely, like from my experience, auditing and CPA world, large institutions, they're not trading on a 2-minute chart. They just have too much capital. They have too much capital that it cannot be distributed effectively on such a tiny time frame. So a lot of the times they're going to be on charts that you might not even hear about. So, the quarterly charts, who really looks at that?
I do.
There we go.
I look at the quarterlies. I look at the yearlies.
Yeah, very, very important. I don't think in the community enough people talk about those. But a lot of the times, let's say, as an example here, why don't we drill into Microsoft here? Let's talk about this one because this one.
Let's do it.
So and after I can give you control to share your screen at any point too. But I'm gonna walk through kind of what I did with this one, and then I would love for you to walk through it as well, and then we can. Compare and contrast and just give so much knowledge to everyone. So
that would be amazing because I already know exactly what I would do, where I would enter, where I would exit.
Perfect. Got it. So right here, I'm going to hit the bar replay so we can look at this together. So I use a scanner, and I think you guys have scanners as well. I think you guys have scanners on Trendspider. Am I right?
Do we have what on Trendspider?
Scanners to scan for the chart patterns.
Oh, yes.
Yeah, got it. So, guys, if you're looking for scanners and all that, definitely check out Trendspider. I think there's the strat scanners there.
There is, and I've even made my own scans, and I share those.
Beautiful. That's awesome. So I use scanners on Thinkorswim. I also use a manual scan. I go to finviz.com. And I pretty much, I look at the heat. I have the heat map basically on a watch list, and I do manual scans from there. But Microsoft is one that showed up for me last week. The double inside bar pattern, obviously a very rare pattern. Doesn't happen too often, especially on the weekly charts. Pretty much what it means is 2 full weeks of consolidations, going sideways, trapping bears and bulls, looking to make a move. So the way that I trade it also in my room is the first and the most simplest way, I guess, for new traders without going to drill down to a lower time frame is pretty much just the breakup. So right here we have this the second inside bar here, and what I like doing here is literally bracketing the bar. So if we break the low of this bar, short, we break the high, go long. So that's kind of the easiest way that I explain it to traders. And then what I like to do is I like to stack a fib on this. So if I take a fib here from the high to the low right here, and, obviously we trigger to the short side, guys. So what I would do here is once we trigger to the short side, I'm going to use the position tool right here, guys. I'm going to short on that low, and my stop loss is going to be on one of the key Fibonacci's. And the reason I do that is so that I can get enough size. I can get big size if I want to. So the tighter I go right here, guys, the more size I'm going to have to get. And you can see right here, the quantity is changing. So that's telling me how many shares I need to purchase in order to satisfy my risk unit. So let's go ahead and let me just put this in here. So let's say I want to risk $1,000 on this trade. So I'm going to put $1,000 in here. Okay. And it's going to tell me right here. All right. So if I short here and I want to put my stop, let's say I want to put it on the 618 to be a little bit conservative. Then I need to buy 321 shares. Okay. And then just hitting the bar replay, obviously, okay, we get filled, we pop up a little bit there, and then we push down by the end of the week. And that would have hit, let's see what target there, that would have hit 1-to-1. Okay, so that's a $1,000 profit. Definitely, for me, I like using the Fibonacci extensions from my targets as well as risk multiples. So if I'm at 1-to-1, guys, I'm going to take off close to half my position, and then I'm going to get my stop loss down. I'm either going to put my stop loss on the bar, or I'm going to put my stop loss at break even for the rest of the position. So I guess that's the way I look at triggers. And then when I drill down, guys, I go to the daily, hourly, 15, 5, 3 minute. Those are the ones that I love. But let's go ahead and let me hit the replay again, and let's go to the hourly chart. So this is a way of what I like to call front running. We front run the trigger before it breaks. And that's very, very, very important to do, because you can get a higher risk to reward. So here we go. Right here, guys, this is a clear break right here. So what I say is, if we miss that break, we don't want to chase it. Instead, what we can do, guys, is wait for this retest. So there we go. So we get the inside bar coming back in for the retest right here. So this is a retest entry right here. And then, as you can see, guys, another outside bar here. So this outside bar here, guys, could be my trigger right there. So just taking this outside bar with the close, I can see the retest right here. I can put my stop loss above the initial trigger bar, and then we all know what happens from there, right? Boom, nice push down. We can see here when we touch that 50% extension, we start to push back up, and then we roll back in to the end of the day. All right, so sorry for the long-winded explanation, but yeah, that's kind of how I look at it, guys. And let's look at Sarah's method here. Do you want to share your screen, or do you want me to drive?
Oh, I definitely want to share my screen.
Okay, gotcha. All right, so let me remove.
Do I just hit?
Yeah,
I see. Hold on.
Here.
Share screen.
Just make sure to click share audio. Click the share audio box at the bottom left, and then you should be good to go.
Look for the share audio checkbox in the next window.
Live TV, guys. This is how we do it. Guys,
share system audio. Got it.
Got it. All right, guys, hit us with a 2 real quick if you're enjoying the stream. I see 327 people in here. That's awesome. So hit us with a 2 if you're enjoying the stream. And here we go. Let's get Sarah's screen up here. Bam. All right, there we go. So
do you see my screen?
Yep, we can see it.
Okay. So just real quick, if you go to the yearly chart, we're obviously at all-time highs. It's just been going straight up forever and ever. Here's the quarterly, straight up this whole time. So when you're up at all-time highs via the strat, like, we consider this to be exhaustion risk. So sometimes you will look for reversals to the downside because you have no one else to be long against if you're at all-time highs. So unless people just continue to buy this, you're not playing against anybody because there's no orders up here, right? There's no previous price history up here because we're at all-time highs. So this is what we call exhaustion risk, and you would look for reversals to the downside. Now, I do a exactly similar thing as Rich, is I'll look for inside bars, and I mark the high and the low, and it's very simple. So if I break, so I would not take this long because I don't know what my target would be. And that's the thing with the strat. You have an entry, you have a stop, you have a target. You have to have all those things. So with this, my target would just be a new all-time high, which is nothing. That's like a $1 move. So I wouldn't even take that to the long side personally.
Got it.
So to the downside, so if we break $300.18, my first target would be the bottom of this candle at 296.83. My second target, just using the weekly time frame, would be 288.64. Then we drill down into the smaller time frames, and you can find well, not in this case. Normally you can find other targets on the daily, but you had 2 back-to-back outside bars. So that would just be the next target. And then we would use multiple time frame analysis. So we know that if this white line breaks, that we want to be short. So we will go down on the weekly time frame. That white line comes from the weekly. So we would go down to the daily and we would look for our strat combo setups. So this is a 2-1-2. So what that means is we would get in on this day when we break the low of the inside day. So now we're triggered in on this day, and then you can put your stop at the high of this day. So your entry is 300, your stop is 302, and you're targeting 296.83. So what is that? Like that's not great risk reward. So a $3 downside move and a $2 stop. So you obviously always have to be, mindful of risk reward and is it worth the trade? But that's how we do it. And it did play out. It just took 1, 2, 3, 4 days, which would have been testing my patience like crazy.
Got it.
But it did work. But this is also, so this is one of those things where you're fighting against time frame continuity because all the time frames are green if you go to the daily. Well, no, we started a new month. So the strat also factors in time. And you'll notice if you go to the monthly, as soon as the new candle opened, so August was all buying. And then as soon as September opened, they just started selling this thing. So we use the flip. So what the flip is, it's any new time frame, any new candle starting. So the monthly is a new candle starting. The new week is a new candle starting. So starting this new week, this new month, it was just selling. So time frame continuity is actually to the downside on the monthly and the weekly. So we want to play reversals into the direction of time frame continuity, which is monthly and weekly. Which is red. Selling.
Got it. So would you? So I guess from a day trade perspective, once that trigger hits, are you getting put options right off the bat? Shorting shares, and are you going to cover them by the end of the day? Are you going to leave some on for runners? How do you approach that from like the intraday mechanics?
Okay, so everybody kind of does it differently, but what I would do is I buy my target strike. So I don't buy the 300s. I would buy like the 297.50s or probably the 297.50s, the weeklies, because that's the other thing. We're using the weekly time frame. So I don't need to buy time. I expect my trade to work out in 1 week's time.
Got it.
So play your time frame. So if you're on the 1 week chart, it should take 1 week. If you're on the daily chart, your setup should take 1 day. And so that's kind of how I do it.
Because for me, normally what I do with whatever time frame I'm on, I multiply it by 2 or 3 for the expiry. So it's interesting to see that you guys actually do it on the same week. So basically you're saying it's gonna work. It has to work now for our style, and if it does work, we're gonna get paid, which is what's really important. And if it doesn't work,
it too.
Yeah, and if it doesn't work,
we get out immediately.
Got it.
Like if for some reason it turns against us, but playing the weeklies on the weekly time frame, your percentage gains are a lot bigger, but it's also a lot riskier because if it doesn't work out, and that's where the risk management again comes in, you're going to lose time, you're going to lose value, so you have to size accordingly.
And that's why options are so powerful because, like we talked about earlier, what you put in is what you can lose, and that's the most important thing is. When you're coming into these plays, you really have to consider, at best, you might have a 70%, 80% win rate. But if let's say your strategy is not working, let's say, well, this month or this quarter, you could have a 40% win rate. So you really need to focus on the position sizing part of the game in order to preserve your capital. And if you can't preserve your capital, then you won't be able to trade. So that's definitely one of the most important things. So I love this time frame continuity. How do you get those the time frame icons and the the green arrows and all that on your chart. Is that something in Trendspider?
This is actually Tradingview.
It's Tradingview. Oh.
So Tradingview, I like to use it better for drawing. I find it easier to draw on. But Trendspider is what I use for my scans. And I think this this is in my pinned tweet. I believe that's beautiful. The Crinklebine favorites Board Writer B. Time frame continuity by Board Writer B.
Awesome. Got it. That's an interesting one. I haven't really seen something like that before, so that's amazing.
And then the other thing is, if you know, all these 3 candles are trading inside this giant mother bar.
Mm-hmm.
So typically this is not a trade that I would take, because I would not expect like this to hit all the way down here. You know, it's so we also have this thing called mother bar problems, which this is what this is. It's kind of just trading in this little range. Actually, the range right now is like this, but the mother bar is, you know, this one.
And I guess that's one of the reasons that I like to use the fibs too, is because I could see that second, the bar that triggered us in there. It's pretty much the same size as that bar, the second inside bar. So just taking a fib and projecting it over can show you, you know, the key areas where we could kind of find a bottom and start to reverse. Because like you said, there are mother bar problems. I like that one. There are mother bar problems there because there are big bulls in that bar. Look, you can see the size of the bar. You can see that there's a lot of volume in there. Yeah. But yeah, great. I love it. So guys, that's a new one. So get the pen and the pad out, guys. We're going to do a pen and a pad alert right now, guys. So in this lesson here for the pen and the pad alert, what I want you guys to write down is always beware of mother bar problems, guys. That's actually something that's important, because you have to remember, if you look at these bars, these last 3 bars, they're really small relative to that mother bar. And at any point, right, if those institutions or whichever large organization created that big bar, if they want to step in, guys, they can again. And as retail, if you're on the wrong side of that, you can definitely lose some money. So that's why it's important, as quickly as these move, you need to be scaling out, locking in profit, moving up your stop, protecting yourself at all costs. Beautiful. All right. Great. So let me see what other questions I have here. I really want to talk about the time frame continuity a lot. Okay, so I guess your favorite time frames. Do you want me to take back control, or do you want to keep going?
Oh, you can go ahead. Go ahead.
Okay. All right. Boom. All right. So let me just get the questions back here. Thank you very much for that. That's awesome, man. I love sharing. I love being able to see other people's charts. I didn't realize that was in Tradingview, because I got to add some of those stuff to my chart there. I think that would be amazing. All right. So we talked about most of these here. So just for beginners, I have a lot of beginners that follow me. What is, I guess, your most critical, important advice to beginners? How can they get involved in trading? How can they make money? How can they protect their capital? I guess, what are your tips for them?
Oh, man. I always go back to risk management, because if you lose your money, you're done.
Yep.
So just know ahead of time how much money you're willing to risk. And the thing is you have to follow it. You can't keep moving your stop loss. You can't go from a $100 risk to a $500 risk. And also, newer traders, never hold through earnings. Just don't do it. Just get in the habit of not doing that.
Let me write that down right here. So never hold through earnings. Changing your risk unit. That's very important. I think a lot of new traders do that. I fell victim to this many times, actually. So in the past, if I'd had a winning streak, let's say I was risking $100 a trade, and I had a winning streak of 5 trades, and then I'm like, well, guess what? I'm Superman now, so I'm going to risk $500 on the next trade. I take a loser on that trade and wipe out all the gains that I worked so hard to make. So now what I do, I actually wrote this down in my business plan here, when I'm growing my capital, is every single week, I'm going to increase my risk unit by $25. So I just put that out there so that way, instead of like going from $100 risk to 200 next month, I'm slowly increasing it so I can kind of let the risk be evenly distributed, so I don't have big up and downs in my account. So that's something that I told myself that I would start doing. But yeah, these are all great tips. So inside bar questions. So inside bars. So I guess out of these patterns here, what's your favorite one? What's one that you've had the most success? Let me pull up your patterns again right here. Which one do you kind of stick to? Do you trade all of them, or do you look specifically for ones that you've had success with in the past?
I get asked this all the time. What is my favorite one? And I don't have a favorite one because it all depends on the bigger picture of the stock.
Yeah.
It really, really does. Like a couple of weeks ago, I even mentioned, I was like, don't sleep on Penn and DraftKings, because I saw the setup on the monthly, and just because I see a setup on the monthly, I'm drilling down into the time frames, so the weekly and the daily. So whatever it is, whatever the setup is, I do prefer on a longer term play that there has been a pullback, which usually is a rev strat. So it's an inside bar and then a little bit of a pullback, which we call a 2 down. Maybe if I could.
Yeah. Let me throw you back on there. Go for it.
Yeah.
Let me add to stream again. Boom. I think you're back. You're back.
Am I? Okay.
Yeah.
So, okay. So right here. So you had an inside bar, which you could have taken this short if you wanted to, and that would have been the target, but it failed.
Yes.
So that means we want to play on the side of the winning team. I refer to this as playing, we're fair weather fans. So the Bears lost, so we're going to go and switch to the Bulls. We want to be on the winning team. So on the strat combo sheet, a rev strat is a 1, a 2 down, and a 2 down just means it broke the downside of the previous candle.
Got it.
Okay. Followed by a 2 up in the opposite direction. So I knew that the monthly trigger, and we also have something called a pivot machine gun where you have consecutive lower highs. So these are all targets. Look where it stopped. I'm just going to throw that out there. Stopped right at that 64.60 level. So let's make this white. This is the trigger. I did that the long way. Okay.
Got it. So this would be getting in on a 2. So a 2 is a bar that just breaks one side. Is that right?
Correct.
Okay, gotcha.
So an inside bar is a 1, an outside bar is a 3, and then a 2 is a directional bar. So it only broke one side of the previous bar. So that's a 2 up.
I love the pink outside bar, by the way. That's amazing.
Thank you. Okay, so 53.39 is the monthly trigger. So the longer term players are going to be looking for this level to get in. So we will drill down. Let's go to the weekly. What happened on the weekly? Okay, so remember, we like to enter on reversals. So you had consecutive higher lows here, here, here. So we hadn't had a pullback. So you have a tiny little pullback here. So this is a 2 down, 2 up reversal. So you want to enter when this week opens, when we break the high of this week.
Got it.
And now we are in force. So anytime we're above 53.39, we're in force on the monthly. So that was the entry. That was the stop. This green line was target 1, target 2, target 3, all the way up.
Amazing.
And look at this. Look at where it stopped. 64.58, 2 cents away from my target on the monthly chart. Rocco? No. Sorry, my dog.
We got a Rocco alert, guys.
He's a talker. And then, so you could have entered here, okay? And then you had no reversal against you. You had an inside bar. You could have added here and took half of your profit here if you wanted and held your remaining half from down here in hopes that you hit a new all-time high because that's the new target.
Got it. That's amazing. And actually for DraftKings, so DraftKings was the only swing trade that we actually entered in the private swing room that I have. We actually took that weekly inside bar. And I guess the way that I look at the biases and whatnot is I was actually looking at that mother bar on the weekly chart, that mother bar beside the inside bar. Basically, that's how I picked my bias. I said, all right, we got a big mother bar push, and I'm going to take that long right there. So we got in at that. The only difference I would say is I used the Fibonacci's of that inside bar. I just flipped it over and projected it. And that's pretty much where we're scaling out. So I got in with shares and call options. And the good thing is we do it all fully automated, right? So actually last Saturday night, I put the orders in the broker to buy the shares at the trigger with stop limit orders, good to cancel. And then I also set up a conditional order. So if it broke above X price, then buy calls. So I did both of them, still holding the shares, scaled out, the calls scaled out as well. And then now the stop is at break even. So, I mean, we'll see how the rest plays out, but that's just like, a very simple way right there. Just taking it bar by bar, guys. Very, very simple, bar by bar. I love how you guys go with those reversal down. So I guess that 2 reversal down, and then you can pretty much play that bar itself, which is something I don't do. Because I feel the only reason I don't do the 2s is because then I feel like there's just so much. I try to keep it pretty mechanical. Like on a weekly basis, I'll probably hit like 30 to 50 inside bars, or variations of, so doubles and holies and etc. But yeah, this is awesome. So do you trade outside bars at all?
Oh yeah.
Got it.
So I love failed 2s. Okay. So I have a rule. So for outside bars, so an outside bar is a 2 that went down but started coming back through. So I have a 50% rule. So what that means is, so once this candle has retraced 50% or more of this candle, I will say, and I say this all the time, I'm like potential outside bar. And what that means is that the high of the previous candle is your target. So for this example, I would have entered at 46.50 and my target would have been 49.60, because if they took out the low of this side, especially on gap downs, when you gap down, and most people should know this rule, gap downs are usually for buying and gap ups are usually for selling. So you want to be on the buying side. And you could have, and this is great. And people are like, well, what do I do with this? You buy the 49 calls at $46 because you know it's going to take out the high of the previous bar. Beautiful. So you can even go 3 strikes out of the money and still bank. So if you don't have a large account, these outside bars are great because you can get cheaper contracts and make a lot more percentage.
I love that. How did you come up with that rule? That's for me, that sounds a lot similar to like the Fibonacci look there. So that's amazing. How'd you come up with that one?
I don't even, so it's so funny because the strat cheat sheet didn't exist. So I actually made this. I have I drew it with colored pencils and marker.
Wow.
And I drew the strat cheat sheet and I was like, because I'm not very computery. So I was like, can somebody please like make this into a document that I can share with people? And so just over time and watching how outside bars played out, I was like, a 50% rule is a great rule. And that's what I teach. That's what I tell people to do. A third of the candle just isn't enough because that's a lot of space to cover still, But I don't know. I was like 50%. That's what we're doing. I like it.
And I found a lot just doing my own research and back testing that the outside bars on the big time frames, like the monthlies, are very important pivots because breaking the low and the high of the previous candle is very important because it's a trap in a sense that we broke to the downside. So definitely some people were shorting. We broke to the upside. Some people were going long. And having that accumulation of trap traders in that outside bar, usually when we break out of the range of the outside bar, that's a high probability setup. The only thing is the outside bars are so much bigger, right? And the inside bars kind of give you a tight risk to reward.
Yes, but that shows you the aggression that buyers are in control. And this was another one with Penn, why I was telling people to watch Penn and DraftKings, because I saw them try to take out the lows. People call this a stop hunt. It's really not. This happens all the time. This is how price action works. They always take out the lows.
Oh, yeah.
And so I was like, watch this. We're going to hit 79.20 this month. We're going to become an outside bar. So I said, if we, breach the 50% level, we're going here. And we did. And then that was the next target. And it hit that. And it hit that and started failing. So potentially right now, we have the potential to do consecutive outside bars on Penn.
Yeah, that's
so
true.
Be careful if you're long Penn, because it did its job. That was the target, 85.69, and it hit 86.40. So 80 cents past its target.
Amazing. Wow. Yeah.
And outside bars are broadening formations on smaller time frames. So we'll draw it like this. So we have an outside bar. So if you go down, this is not a great example, but yeah, this looks like crap on the weekly. I don't like it, but yeah, I don't like that at all. But they are. Oh, I guess the daily. Let's go to the daily. No, I still don't really like it.
So the broadening formation, does that help you with targets?
Yeah, let's go to Chewy. That was a good one. So with broadening formations, they stop everybody out because you make a new high and then you have a pullback, you have a low. So most people who are swing traders, after this low was created, that's where they would put their stop. So you have a low, then you made a new high, then you made a new low, then you made a new high, then you made a new low. So when we're trading this, okay. So we know everybody who was long from here and rode this up had their stop here. So once the price came down, hammered up, we would be long, and then our target would be a new high. So once we got the new high, then we would get out, or you could go short. Then you have a 2 up and then a 2 down reversal. So then the target again is to make a new low, which it did. See, we made a new low. Then the new target is to make a new high compared to this one, which we did right here. But do you see how that would stop everybody out?
Yeah. And that to me, those broadening formations to me seem a lot like the Fibonacci projections. Because if I look at it from just looking at it from my eye, I could see it looks like about a 10% new high each time. And a 10% high, then a pullback, or around a 272 high, and then a pullback. Definitely. So for me, I guess the way that I look at that is more of algorithms that are taking those trades. They have predetermined targets, whether it's a 10% extension, 272 extension, whatever it is. And every time we hit those targets, they start to dump and pull back, and creates that kind of that megaphone effect.
Yes, and this is why we're not breakout traders. The breakout is our exit target, or the breakdown is our exit target. So if we are long from here, we're now short up here, and then a new low would be the target, and then you'd flip back, go long, the new target's a new high. So we don't you know, we're not entering when we get a new high. That's where we're exiting, and we're in from down here.
Gotcha. Beautiful, beautiful. Actually, if you don't mind, can I just throw up my chart too, just to show?
Yeah, go for it.
It looks really, really nice here, guys. So I have the same thing Sarah has here, guys. I just obviously my color coordination is a little bit different. But here we go. So that broadening formation. Let me see if I can try to draw it. So if we take this daily here, take these trend line. I guess we can start from back here, kind of projecting it like this down here.
So what I do is I go from a high to a higher high.
High to higher high. So let's take this one from here to here. And then we can continue. So we have 3 points
there you
right.
Go. That'll work.
And then we have
a low to a lower low. You might have to go start a little higher.
Over here. Gotcha.
Find a pivot low and connect it to a pivot low.
Gotcha. Okay. So
there you go. Perfect.
And then there we go. Beautiful. So this formation right here, guys, is very powerful because let me zoom in here. So if I was to go ahead and start adding some Fibonacci's to this, so we could see we have a swing low right down here, and then we have this swing high right up here, guys. And then check this out, guys. So now if we have the broadening formation right here, we have this. Let me take this drawing tool out here. So we have this. Actually, let me get the arrow. So we have this push up, okay, and we pull back. Look at this, guys. So we pull back right here, tag the 50. Okay, and you can see right on that 50 here, there was that big wick. So that's characteristics of an algo buy. And then look at this. On the way up, we stop at the 10%, drop a little bit down, retest some of these fibs, and then look again, guys. We tag the 272 and start dropping down. And then look at this. Now we come all the way back down to the 786. And if we look at the bigger picture here, and we pull this Fibonacci out even further, we can see again these areas being tagged. So it's amazing when you take this this formation here, we stack the fibs on it, and we can see it's all almost like we're living in a robot's paradise here. Just percentages, 50% targets, and then reversals. So this knowledge is so important for you guys to know, because if you're long and you're going into breakouts, you gotta have these formations, you gotta have these fibs up here to help you scaling out. And it's the same thing when you're going to the downside. You got to know where these fibs could be and these broadening formations down here to help you see where algos can step back in. So I think that is very, very critical there. And it just two different ways of looking at it. But I mean, I guess it's even more powerful when you overlap them on top of each other.
Yeah.
That's powerful. Wow.
That's awesome.
Wow. So there we go, Sarah. I mean, we're at 53 minutes in here. I don't even know where the time goes. It always goes like this when we're hanging out. But what I want to do is I want to give you the floor right here. There's obviously been a lot of questions in the chat about, your indicators, your patterns, what you do. So I want to give you the floor. What's the best way that people can follow your material, that they can learn from you? I know you have a YouTube channel, but what else? How would you recommend people to go about doing that?
I would recommend people follow me on Twitter, because like you showed earlier, my pinned tweet, I made that for you guys. I want my followers to have access, and I want them to have easy access to everything that I teach, I try to make things. It must be I'm a mom, I was a manager, so I understand that learning has to be easy. So I try to lay it out in a way that is easy for people to see. I'm crazy OCD, so everything is nuts. But everything is on here. So my Twitter handle is @TradeSniperSara. And then, my little name is Sara Strat Sniper, because I like the way that sounds better. But yeah, everything is on here. My YouTube link is in my Twitter bio. It is also in this Google Doc. Yeah, and I try to do weekly Stretchication Saturday videos, except I've been just balls to the wall crazy this month. I'm trying to sell my house, so I'm spending every waking moment painting. So I haven't been so active on Twitter this past month, and I miss it terribly, but gotta sell the house while the market's hot. You know what I'm saying? I want that 40%.
Definitely. So I have your YouTube here. look at this content, guys. This is amazing. There's so much for us to learn. There's so much ways to keep learning, guys. Always keep learning. You never know it all. Trading is a game that changes every month, every season. Sometimes fibs are working. Sometimes order flow is working. Sometimes that's the game of trading, guys. If something worked 100% of the time, then we wouldn't be having these discussions. So the main thing to always remember, like Sara said, is focus on the risk part of the game. Every setup you take, almost if you look at it over thousands of trades, it's going to come down to a coin toss. The question is, when you right, are you making a lot? And when you're wrong, are you losing a small fraction of your account? But here we go. So almost at 10K subscribers, guys, please subscribe to Sara's channel. Let's see if we can help her get over the 10K mark. And then you definitely deserve it. And then here we go again. This right here, the strat combos, I would print this out, guys. Take it, put it on your desk somewhere. And you don't have to trade all of the patterns, but definitely have them there as reference, I would say. Very, very, very good to have.
And that's a great point. Some people just, really focus on one pattern, and that's really all you need. If you can get really good at trading one pattern, that's all you need. Like 2-1-2s, they're the easiest ones, especially when it's full time frame continuity, it's really all you need.
Got it. So the 2-1-2. Okay, gotcha.
Yep. So like that top left one
right here. All right, good. So guys in the chat, let's keep a lookout for these ones with Sara. Let's bring this to our attention, to the community, and let's keep our eyes open for this. They're definitely very, very powerful. For me, guys, most of my trading is just inside bars because I like the risk to reward. That's factored into that. And I just like doing a few scans at the end of the week and getting my list. And for some people, more is better because some people will get bored trading the same thing over and over again. But for me, I really want to just do the same thing that I can automate every single week and that I know I'm making money with. Because at the end of the day, we're all here to make money, right? So find which patterns work with you. It's, which one fits your personality. Some of you guys like to go for home runs. I know that, right? Some of you guys like to go for home runs. Some of you guys like to be in and out. So you got to find those patterns that are going to suit your style and your personality. Beautiful.
Exactly right. And I'm very curious to see since you've seen this 2-1-2, I'm very curious to see if you notice that it always takes out the mother bar of the inside bar. So if that's always the target, or if your fibs are a little bit different, I'm real curious to see because I don't use fibs at all.
My opinion, Sara, is from a lot of the back testing that I've done. I have a lot of data behind my targets because I'm one of those guys just like you. Just OCD, need the numbers, need it to line up. And for me, generally, what I would say about those targets is I would look for a 10% extension on that target. I would go for a little bit above that target.
Perfect. Exactly. Yes.
Normally what I see is that if it's going to touch that level, it's going to push the 10% anyways. So you might as well, get a little bit more profits in there. And that's actually, the 10% is not really a Fibonacci, but it's something that I basically developed from trading for a long time, and the back test and the data that I had, I came up with that 10% because most of the times, if you want to be reliable, take that level, add the 10% extension on it. That's kind of where I see most of the targets being very, very reliable. But at the end of the day, it's cyclical in nature, in my opinion, meaning sometimes the 10% is better. Sometimes it's not even better to go for the target at all because the market is not even getting there in some cases. So that will really come down to proper risk management. That's the only thing that's going to protect you when the targets are not getting to where they need to be.
And I like what you said a little about the overshooting, because the overshooting, so on the third two, so the third bar
right here,
that could be your that little 10% extension. That could be the top of the broadening formation.
Yes. And one thing I wanted to say before I forget, I was going to mention this, but I actually have a reversal strategy. So which is pretty much, it's looking at it in a blind sense, having limit orders on those extensions. So for example, here with that 10% extension, when I'm getting out on my long position, I'm simultaneously buying puts because I know the risk to reward is good. Because the way that options work as well is if it's coming into my order, if it's pushing into the 10% order, the puts are going to be cheap. So that in itself is giving me a great risk to reward. And even if I'm, like I said, guys, we know in the chat, guys, if we're hitting it 34 out of 100 times with the 2 to 1, we're going to make money. So having those strategies, because sometimes the breakouts are all going to be getting faded, and that could be just the overall market context. And having a mixture of that fading type of strategy and the breakout strategy, I think really helps me to stay in balance.
I love it.
Love it. All right. So here we go. So we're at an hour. I know you got to get back to the house. That's more important. We need you to sell the house and get back to us here on Twitter. But hey, I appreciate you. I'm very grateful for having you here. I'm grateful that you're able to add so much value to the audience. At the end of the day, it's all about learning and giving to the community. And I'm so happy that you have a channel that, you have so many things out there that people can learn from. So appreciate you greatly.
Thank you. I am so glad that I met you and found you. That's the funny thing about Twitter. You think that you're following the best that's out there, and then you'll stumble across one, and I was like, I need him. This is my guy. And I love, oh my God, what you do. I was scrolling through your page today, and I was like, this dude, he doesn't stop. He's just giving. You guys, your followers must be so thankful for you.
We're going straight to the top, man. We're going straight to the top.
Almost at 30,000.
Yeah, hopefully we break that soon. And it's important to give back. It's very, very important, because I know you've been in this situation as well when you first start trading, and it could be a really dark journey, especially if you're losing money, and especially if you're losing money that you can't afford to lose. And there needs to be people in the community that are not, that are not just gonna pump things or make people have FOMO. There needs to be people that are willing to be teachers and willing to educate. And anytime I see someone doing what you're doing, I know we have to collaborate. And I'm so glad that we are today.
Yeah, me too. And one thing I also wanted to say that really, really discouraged me when I was newer was and people that follow me know I never, ever, ever post my P&L. I might post percentages, but I will never post dollar amounts, because when I was starting out, I mean, the traders that I was trading with when I started with the chart guys, like these guys had, $10,000 gains, and I'm trying to, eke out $200, and it was disheartening. And I was like, why can't I do that? So I never post P&Ls, because it's not about the P&L. Focus on your process. Focus on, your I'm probably going to say this wrong, your batting average. Just hit a bunch of small winners. Build your confidence. Do not compare yourself to other people. You are not other people. They are not you. You are not trading their kind of money. Just do you, and don't get so caught up in the dollars. And anybody who's trading, this is you're giving everything all the time. So just don't, oh God, you have to do this for the passion. This is not about money. You're a trader because you love it. You eat, sleep. I don't want to sound like JB, but it's all you think about.
And I can attest to that for sure. And and the thing about trading is that, I also had a similar story before I got into my CPA world. I worked as an overnight manager at one of these stores like CVS. Actually back in Canada. I was originally from Canada. So I worked there.
I was going to guess that. I could hear it.
So I worked there as an overnight cashier, worked my way over to supervisor. Then I became a manager while I was going to university. And let me tell you guys something. Trading is something that you can make money in your sleep. Like you said earlier, it's something that there's no limit to what you can make. In the real world, even in this industry as a CPA right now, guys, there's a cap to how much you can make based on industry standards, et cetera, et cetera. But from trading wise, there is nothing. There is no ceiling. You can make as much as you want. You can work as hard as you want. And that freedom is something that a lot of people crave. And I really want to push that out to everyone, is that if you want it, it's going to be hard. It's not going to be easy, because we're competing with, sharks on Wall Street. It's not going to be easy. But when you get it down to a science and when you can master it, it's something that you can take for the rest of your life. It's a skill. It's like becoming a doctor or a lawyer. You have that skill for the rest of your life. And, you know, just keep pushing that positive passion to people and showing them the endless opportunities is really, really, really important to me. And I know it is to you. So again,
yeah, what you said was so important about freedom. You know, my goal when I started doing this, I'm not trying to be rich. I'm trying to make, my daily goal is very small. My daily goal is 300. And that might sound like a lot to some, and it might sound like nothing to others. I just want to pay my bills, you know, live in a house, have, you know, extra money and be dependent on myself. I don't need Rollies, Lambos, what boats, yachts, hot chicks. I don't, whatever, you know, I'm not in this for that. I'm in this to be self-sufficient and do it for myself.
Got it. That's amazing. And like, again, everyone, that's the thing about trading is that whatever freedoms you want in life, you can get it from this game. And for me, actually, you know, my goal is actually to make a shit ton of money in trading. And the reason why is because I want to prove to myself that what I'm teaching people and the way that I'm helping people, that it's not, you know, it's not just me saying hindsight things. I want to prove it to the world. I want to prove it to everybody. And I also want to take the money that I make. And like I was telling you earlier, I want to build that school for children that I have in my mind. That's something that I have to do coming from, you know, being an at-risk youth in my early age. And I had a few guidance counselors that really, really, you know, were like the key guidance in my life that I needed. And I want to be that for some of the youth in the future. So having that school, putting charts in front of them, getting them to know what inside bars are in grade 2 or 3 or 4, man, I just can't imagine if I knew that when I was younger, where I would be today. And I think that's something that if the mainstream's not going to push it, that's something that I will for sure.
That's amazing. And the world needs more people like you.
Thank you very much. Appreciate that. All right, Sara, we're going to head into chart requests. I'm not going to keep you any longer. Thank you so much. And let's keep in touch, and hopefully we can collab on some things in the future. It's very important to me to make sure to my audience that I bring real traders that are helping the world. And thank you again for all the content that you produce. And guys, please, let's get Sara to the 10K on the YouTube. Where are we at right now? Let's see what we did. There we go. Boom.
Yay! Oh my goodness. Amazing. Wow, that feels like my first 1K followers on Twitter. That was my goal. I started posting charts in March of 2020. And my goal was, I was like, I'm going to post charts and help people. And I want to get to 1,000 followers. It was so funny. My boyfriend goes, if you get to 1,000 followers on Twitter, you're going to be Twitter famous and I'm breaking up with you. He loves to mess with me. That's a big thing. Anyway. Man, that's amazing. Thank you, guys.
Thanks, guys. And let's hit Sara with a 3 on her way out. Let's show her the love and support that we have for everything that she does for the community, guys. Hit me with a 3 in the chat fast. And let's wish Sara the best. And hopefully she gets her house sold soon. And I want to see this YouTube. I hope we can collab on more things in the future. Obviously, we're both like crazy busy, but we'll make time.
I'm 100% down anytime. I'll take an hour out of my day because it's my passion. It's my love. 1,000% anytime.
Beautiful. All right. So we got all the 3s in the chat. Thank you so much, Sara. Have a good night, and we will keep in touch.
All right. Thank you, Rich.
All right. Take care. Bye-bye.
All right. Bye.
Boom. There we go, guys. Beautiful individual, kind, willing to share, willing to help. I hope you guys enjoyed our special guest, Sara. It was great, man. It was really great seeing different perspectives. You know, one thing that I'll say, guys, is that I'm always learning. I'm always trying to get better. And if you don't have that mindset, guys, you're not going to succeed in this game, because trading is something that changes every single day. Okay. And if you can't be willing to learn, if you can't be willing to adjust, it's not going to work. All right. So let's get into the chart requests. Like I said, guys, I'm going to do some giveaways here. Let me talk about the book, obviously. So I think I got about, let's see, let's go to the Twitter here. Let me see what's going on. So I think I got about like 800 people that signed up for the giveaway so far, maybe 1,000. I'm not sure. So right here, guys, I'm going to be doing giveaways for the launch of the new book, The Drill Down Method. Many people have been asking me about this for a long time. I'm pretty much done the book. The only thing that I need to do, guys, is I need to insert more charts, because I promised you guys I'll give you guys a lot of charts. Here we go. So let me pull over you know, a little teaser here for you guys. You know, we got the Trading Wars pattern in there. We got the Nirvana. You know, that's a little sneak peek there. We got the table of contents here. So, you know, I worked till about 4 or 5 in the morning putting this together, and I'm really, really excited to get this launched. So make sure you sign up for the giveaway. I'm going to be giving away about $10,000 worth of value here, lifetime memberships, 10 copies of the book, cash prizes. Make sure to sign up, okay? All you got to do, click that link, put your stuff in here. I'm going to get an email with your email and all that, and then I'm going to put you in the draw. All right? So next Sunday, mark the time, okay? Or put this date on your calendar. Next Sunday, the drill down method is coming out. We're going to be taking over. All right, guys? So hit me with the 4. Hit me with the 4 for the 4 horsemen right now if you guys are excited for the drill down method. Hit me with the 4 for the 4 horsemen. I like that line. Let's get the you know, the Ric Flair boys out here. All right, boom, 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 boom. Beautiful, beautiful. Good stuff, good stuff. All right, so let's look at some chart requests, and let's continue. Okay, so I don't know if you guys tuned into the stream last night, but I went through my top swing trade picks. Let's just go through them very quickly, because I know most of you already have seen that video, but let me just do that for anyone else here that's new. So I have the 2-week chart and the 3-week chart set up and ready to rock and roll. And I have a few great setups that I want to share with you guys. So we got that inside bar on Microsoft 3-week chart. Very powerful, pressing up against all-time highs. We have MU with the Holy Grail, Bank of America. Oops, sorry, guys. I think this should be the 2-week here. Let me just redo that. Yes. Okay. So there we go. Inside bar, MU, Holy Grail into a double inside bar, which is a very, very rare pattern, guys. I think there's a lot of potential here. Bank of America inside bar, Chipotle, Holy Grail, Chevron inside bar, Home Depot inside bar, JP Morgan inside bar, and Lowe's with another Holy Grail setup. And then if I go to the green list, this is the 3-week chart here set up, guys. So I manually scan for these ones, guys, because I don't have a scanner for these time frames, so I just basically manually scan. Where did my watch list go? Boom, boom, boom. Here we go. So QCOM, beautiful inside bar, hugging that 20 EMA. Love it. Pfizer, guys, doing its thing. This is what I call like a shotgun setup. We have those double wick shotgun. I love that. Fubo, definitely looking like it's ready to rock and roll. You see these wicks over here, guys, wick, right? So we're pressing up against these wicks here. We can definitely squeeze them if we start getting going. Or conversely, guys, if we start breaking down, that could be very violent with all this short pressure that we see in here. Caterpillar, another shotgun setup here, guys. I love those wicks. Walmart, inside bar, AMD, shotgun, beautiful. Okay, beautiful shotgun on AMD, guys. I love it. Let's keep going here. Pepsi, inside bar, Procter & Gamble, inside bar, Texas Instruments, inside bar, ExxonMobil, inside bar, Ford, inside bar, Canada Goose with some of the crazy, I've never seen this pattern before. I don't even know what to call it. I guess we're going to call it the Ragnarok here, guys. Look at this. Inside bar and outside bar stacked on each other. A lot of consolidation. I've been shorting this name for a while. Looks ready to rock and roll here. Lulu with a beautiful outside bar at all-time highs. That one caught my attention. These type of bars, guys, these pivots here are very important because we're breaking into all-time highs with that. There's a lot of institutions involved right there. Under Armour again with a nice shotgun setup. Boom. All right. So those are my picks from my longer term swings. So in terms of options, what I'm going to be doing there, I'm going to be getting 6 to 9 week out expiry. I'm going to be drilling down on the daily. Also, I'm going to be potentially using some triggers to get conditional orders to get me filled. All right. So let's go into the Discord real quick. And let's get some chart requests from the members here. And then I'm going to take some of your chart requests. And then we got to do this in rapid fire mode because we're already running out of time here. So let's get this going. Boom, boom, boom. So RKLB. So for those of you who are new to, how I look at trades to analyze them, I'm pretty much always looking for an inside bar or an outside bar setup. If I don't have that setup, guys, on the weekly, daily, hourly, any one of those time frames, I'm not going to take the trade because I need to trade something that I know how to trade. I'm not going to chase something that I don't know how to trade. I know how to trade inside bars. I know how to trade my patterns. Okay, so boom. We got here Eric S with a 1999. Thanks for Tesla heads up last Friday. Thank you, brother, man. Appreciate that, bro. Good to see you back in the chat here. So here we go, guys. So this Rocket Lab USA, beautiful inside bar right here. Absolutely love this bar. So guys, how can we trade this bar? For those of you, the guys and gals who follow us, how can we trade this bar right now? Tell me, guys, how can we trade that? How can we drill down on this bar? What are the ways we can do it? So let's brainstorm. Right? So we can, first of all, what we have to do is we're going to draw the high and the low. Okay, boom. Okay, what can we do? We can drill down. We can go. So this is the daily chart, right? So we can go down to the 5-minute chart on a name like this. Personally, guys, I wouldn't trade this one because it's just a little bit too volatile for me. I don't like trading names that are this cheap too much. And also, the size of the candles. But I'm just going to show you guys in case you guys want to play this name. So we can go down to the 5-minute chart, guys. We can take the opening range breakout here. We can look for the triggers, break above this yellow line, break below. I actually made a new video on the triggers and it did really, really well. So thank you for liking the video and supporting us on YouTube right now. On triggers, we can use the fibs, right? We can draw the Fibonacci of the range. So how do we do that? We take the Fibonacci from the previous day's low to the high like this. And then what we can do is we can use these Fibonaccis here as areas of support and resistance. Or if we break through the high, we can use these Fibonaccis up here for reversals. Or if we break below, for reversals to go long. So very, very simple. We don't need to complicate anything. We just take the trades. If it wins, we make money. If it loses, we lose small. That's it. That's all we care about. Let's keep going. Okay, so I'm going to pick one more. So we already got this brother here. So let me get my brother here, Remy guy. Pfizer, we already did. JBLU. Let's see what this is. JBLU JetBlue. All right, so we go to the weekly right here, guys. We have a nice pattern here. Inside bar followed by an outside bar. Pretty nice. So definitely we could do the same thing. Drill down on that. This means that there's been a lot of consolidation, a lot of chop, and a lot of traps. Anytime we have those three things happening, we can have an explosive move. So thank you for that. So Facebook. This might be a little bit older, but let me just see. Oops. Facebook. Yeah, so this post was a little bit older from back in there. All right. All right, so these are a little bit older. So anyways, so there we go. So we got some chart requests there from the Discord. And then now let's take some from the chat. So what do you guys have for me? So I see KO on the monthly. Let's take a look at that. KO on the monthly. Yes. So Coca-Cola is on my radar also, guys. So this is very important here. Let's talk about this, okay? So we had a Holy Grail that closed last month, okay? So if you notice something here, guys, this monthly bar right now is still forming. It hasn't closed yet. It's still forming. So because it's still forming, we can use something, what I like to call the power play, right? So what I like to do, guys, is I like to use the power play. So the power play is essentially when we have this range from the prior month. So we have a Holy Grail range from the prior month that's already closed. What we can do here is we can actually use this bar as a trigger to get in using the power play. So right here, guys, so if we just look at this bar, we can treat this bar as our triggers. So if we break this low, continue to the downside. If we break this high, flip and go long, right? Or we can drill down to the daily right here, guys, the hourly, and look for more entries. So really nice setup there. That's what we call a power play. Okay, let's keep it going. Mara. So Mara, nothing on the monthly, weekly, nothing, daily, nothing. So we move on. All right. So if we don't have the patterns, guys, we move on. AMAT. We have the monthly, nice tight inside bar still being formed. This weekly has already formed an outside bar, which is very powerful. So now, guys, using this outside bar high and low will be a nice indication for the potential for the next leg in this chart. I really like that. On the daily, we had this inside bar and then this gap up and this, the sell off there. So definitely like the weekly. Very, very good to go. Zoom. Inside bar formed last week. I actually, Zoom came to my attention, but it's definitely worth a shot. I'm going to take a shot here on Zoom, hanging around that support. Nice tight inside bar, looking to play the break of that bar, keeping it very, very simple. So I actually have to go and put my orders into the broker. I was supposed to put in yesterday, but I was too busy writing the book. So I didn't have the time, but I'm going to go do that. Neo. So let's do 2 more from the chat. Neo weekly, nothing there. Monthly, we have a power play, right? Power play set up here. Inside bar forming. Go to the daily, nothing there. So I would definitely play it off of that power play. Where else do we have? Did I look at Airbnb yet? Airbnb, boom, weekly, nice push up. But I don't see another pattern for me to be interested in right now. Okay. So there we go. So now I want to do, so guys, about the orders and stuff, I can't show you how to do the orders because my broker might be different than yours. All right. So I use interactive brokers, and I actually, in my private room, guys, in my private Twitter, I actually do show the orders, but those people have already, you know, they understand, you know, what the rules are and stuff like that. But I can't show it here because if you don't have interactive broker and you try doing it and then you lose money, guys, right? I don't want that to happen to you. Okay. Call your broker. Just call your broker. It's not that hard. Pick up the phone and call them and say, hey, I want to put in a conditional order. I want to put in a bracket order. They're going to show you what to do. That's their job, guys. That's their jobs. All right. So let's continue. Boom, 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 boom. So I want to go here to the chat and I wanted to do, yeah, all right. Let's, Sarah's helping us out here. Let's help her out. Thank you very much. Let's thank her for that. Thank you very much. Boom. So I just want to pick some of the chart requests that you guys had. Where is it? Where is it? Where is it? Where is it? Somewhere. There we go. All right. So let's pick a few from here. So SPY. Let's go check out SPY. What happened with SPY? Because I know a lot of you guys like looking at SPY. So SPY, go here to the monthly, guys. So the one thing that I did notice about SPY, on the weekly chart, we actually finally took out a week's low. So like I was mentioning in a few other streams, when we start taking out the previous week's low, that's when, you know, things can get a little bit volatile, because what happens is if you're swinging this, if you're swinging SPY, let's say you took this holy grail on SPY back here, and then you're swinging it, and then you start saying, oh, holy man, we're all the way up here at 450s. So what you're going to do is most likely you're going to start trailing the lows of these bars. Or let's say you took this outside bar right here. You're going to trail the lows of the bars. So when the lows of these bars start getting taken out, we have stop runs. And this is why we see this massive pullback coming in. We still have more room to the 20. You can see normally the 20 EMA is a nice little spot to stop for SPY. So let's see if there's more follow through. So we'll see at the open. All right. So going here onto the daily chart, this was a beautiful setup right here with that outside bar previously and then that big follow through. So let's just look at this one. If you guys don't mind, I want to take a look at this because I always look at the inside bars. Let's look at the outside bar. Let's do something different. Hit me with the 1 if you want to look at the outside bars. Boom. Hit me with the 1 if you guys want to check out this outside bar real quick. All right. I know you guys are getting tired here. So what I'm going to do here, guys, is I'm going to draw the Fibonacci of the candle. The high right here is 452.57. So I'm just going to make sure that I put that in here, 452.57. And then I'm going to put the low in here, 448.72. So guys, can we apply the drill down method to the inside, to the outside bars? Can we do that? What do you guys think? Hit me with a 3 if you think it's yes. Hit me with a 4 if you think it's no. Can we apply the drill down method to the outside bar, or can we only do it on the inside bar? What do you guys think? Okay, I'm going down to the 5. Okay, I see the 3's coming in. Exactly, guys. We can, because the outside bar is a very powerful bar too. So in my book, guys, I wrote about that actually this weekend, the power of the outside bar. It's very powerful. The only difference with the outside bar is that the bar is bigger. And because the bar is bigger, sometimes the option premiums are going to be more expensive. And that's the one thing that, you know, it's difficult as an option trader, because you want things when they are very, very cheap. Okay, so here we go. Let's hit the replay right here. Boom. First bar comes in right here. Okay, right on the 618. Boom, there it is. You already made money. Okay, opening range breakout on the 5 right there, guys. Clean opening range breakout. We have that first 5 minute bar. Take the break of the first 5 minute bar. Boom, right there, guys. That's 1-to-1. That's good money right there. Let's see what else it has. Oh. Okay, now we rich. Now we rich. See that, guys? Look at that. It doesn't get any better than that, guys. You guys understand? It does not get any better than that. Look at this. Beautiful. First 5 minute bar. Nice little upper shadow here, inverted hammer, etc. Take that opening range breakout, hit 1-to-1, scale out, put the stop loss to break even, and let it rip. Beautiful. So let's fast forward. Bam, look at that. Guys, if you can catch some of these plays, if you catch 1 or 2 of these every month, you're good to go. And look at this. For those of my friends that love the fibs like me, we love the Fibonacci. We love it. We love it with a passion. Fibonacci is our second wife. Okay? Always. Look at this, guys. Watch. Okay? So we come in here. We have that push down. Okay, we start pulling back. This is called the afternoon Fibonacci leg. Why is it the afternoon? This is what I talk about in my book, is the afternoon Fibonacci leg, because this is around noon. See that 12 o'clock, 12:30? What happens is after that first leg, see, look, we have a 2-leg move here. So how many legs does a human have? It has 2. What is a reliable amount of legs for you to scale out? 2 legs. Here's the first push right here, guys. Boom. Let's draw the arrow. First push. Sideways. Continuation of the leg. That's what I keep telling you guys. 2 legs and you want to be out. 2 legs and you want to be out. Watch that. Pull, push, boom, out. Okay? But you can keep some runners on if you want to take it into a swing. But generally, that's your highest probability chance. And then here we go. Look at this. Afternoon leg comes in. We start pushing back up. We come back to the 50, guys, and look at all of these inside bars we have right here. Inside bar, inside bar, inside bar. Showing us. The inside bar is showing us, hey, we're pausing up here, man. We're pausing up here. Something is happening up here. We're pausing up here. We're pausing up here. Something is happening up here. Boom, 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 boom. Taking the break below any of these inside bars. Put your stop anywhere, guys. 618, 786, whichever one. Whichever fib you want to use. Look at that. Right into the close. And then check this out for bonus pick right here. Check this out. At the close, we tag the 50% extension and we have a little algo pop. You see that algo pop? Why? Because the algo is loading up on the 50 retracement and scaling out on the 50% extension. Do you guys understand that? Hit me with the 3 if you're following me right now. This is what's happening. It's a measured move, measurement. Take the ruler out. Okay? Take the ruler out. 50 to 50, 50% retracement to 50% extension. Beautiful, beautiful art. That's what we see in the markets. All right. So I love that. I love that. I love that, man. Just hit me with the, if your mind is blown, hit me with a 1. Every time I look at the chart, I just love it. I love it because it's beautiful. And this is the things that we talk about, guys. We talk about the same things every single stream. Every single stream, I'm telling you guys the same thing. Opening range breakup, opening range breakup, opening range breakup, opening range breakup, precondition. We need the precondition. What's the precondition? The precondition is this. The precondition is the seasoning of the chicken. What do I mean by that? Well, when you want to go take chicken, you want to grill it, you want to have a good taste. You got to put some seasoning inside of it. You got to make sure that it's nice. You soak it in the flavors and you get it all ready to go. That's what we do with the preconditions. The preconditions right here, guys. The inside bar, the outside bar, the first precondition is going to help us to look for picks that can move the next day. All right? Beautiful. Okay, so what else did I need to tell you guys today? I wanted to tell you guys, make sure you sign up for the giveaway. The countdown starts right now for the book, guys. The countdown starts right now. Hold on one sec. Let me see if I can... Okay, never mind. So yeah, the countdown starts right now. Next Sunday, we drop in the book. Next Saturday is my birthday. We're going to be having a good time. We're going to be doing giveaways. We're going to be doing everything. All right. So right now, I'm going to announce a winner of the giveaways right after I close this here. The people that attended, I'm going to give away 1 month for free in the private swing room with the book. I'm going to give it away. And then we're just going to be doing a lot of giveaways and we're going to be giving back. All right. So there we go. I'm out of here, guys. I appreciate each and every one of you. It's been 1 hour and 30 minutes, and I don't want to keep you any longer. So thank you very much for being here. I appreciate you. One thing that I want to say before I go, so every Sunday we talk about, a little bit of motivational stuff to get us through the week. The week is a grind, guys. It's always a grind. Every single day is a grind. That's how life is. To get somewhere, you got to grind. But basically here, this is what I want to say. Everything, let me see. How do I want to phrase this? All right. So let's talk about this like this. Okay. So we have what does skyscrapers, the Great Pyramid, Tesla cars, inside bars, what do they all have in common? What do they all have in common? What do all these great wonders of the world have in common? These great human inventions that we have, the internet, The internet's an amazing human invention. What is it? Everything starts from one single thought. Somebody, somewhere, at some time, sitting down, daring to dream, and have a thought in their head. Some are thinking about having electric cars. Some are thinking about winning in the stock market. Some are thinking about building huge structures. But what is the point? The point is this. You have the greatest resource of all time. It is your mind. So let me ask you a question. Honest question. Okay? How much of your day do you spend actually thoughtfully thinking about new ideas and ways to get better? How much percentage of your day do you spend doing that? Or how much percentage of your day do you spend watching TV, watching the news, listening to somebody else's story, thinking about random things? What's the percentage? From my experience, guys, most people, less than 5% of their day, less than 5% of their life is actually spent in thoughtful thinking. I mean, thinking about ways to create and to improve and to get better. So something that I want to tell you guys, there is a war for your mind. The advertisers are fighting for your mind because they want you to think about their product. The furus and gurus on Twitter and social media are fighting for your mind so that they can make you buy the stock they want, so they can short it. Okay? The basketball teams and the football teams are fighting for your mind so you can do your sports betting. Okay? And there is a real war that's going on out here. So I encourage you this week to try to put aside 30 minutes every single day with you, yourself, and yourself. Get a pen and pad out and start writing down some things. Start writing down some things. What do you want to achieve? What's your goal? What ideas do you have to bring to the stock market for your trading? What ideas do you have to bring to your family? Okay? That's how we do it. Get that discipline in 30 minutes a day. Brainstorm. Do something different. Take the TV off. Take the news off. Take the gambling off. Take it all off, guys. All right? That's very, very important. And this is how I've been able to create my trading systems and how I've been able to create my content is through sitting down and doing thoughtful thinking about ways I can get better. How can I have a better stop loss? You guys know how I was talking to Sara about the 10% extension? Where did I come up with that? Where did I come up with 10% extension? I came up with the 10% extension by sitting down by myself and back testing, getting my ass kicked, losing my own money, and then learning that, hey, this 10% extension might give me an edge. And then going and doing 1,000 hours of back testing to make sure it works. Okay? So there we go. That's it for me. I hope that motivated you guys a little bit. Hey, don't forget to comment, like, subscribe. So for the giveaways, guys, we're doing 10 books, my new book giveaway. We're doing some lifetime memberships, some cash prizes. Like, comment on the video, subscribe. I'm going to be watching everybody. I'm watching everybody. Those that supported me when I was nobody will be rewarded. I promise you that. Okay? Thank you very much, guys. Take care, brothers and sisters. Have a good night.